Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 26th Commitment of Traders report of 2013. As usual, we're going to start off with the changes in commercials positions. Here we go. You can see we've got grains on top, starting with oats, where we had a 34% change in commercials positions. Roughly the same change size in small speculators and a bit smaller change in large speculators positions. Here you go, you see the changes over here. We do see larger changes in the past, but it's definitely a larger than average change. In this case, it's more of a bullish signal. If we look at the larger changes, we had one over here that was a bullish signal, and a couple of days later prices reacted, and then we've got a couple of larger changes over here. Another good example over here. So we can say basically that in oats, changes may affect prices. Of course, we usually don't forget that these are near-term effects. So we're going to have a look at the 5 years chart and just have a look at the extreme. We basically had one. It was a bearish extreme. It was a sell signal. It wasn't an all-time, but you can see over here that commercials were below 5,000 contracts net short, and that's definitely can be considered a sell signal. And you can see what happened to oats when we were at such extreme. So it's actually really interesting, because the extreme that we had one report ago that was suggesting that prices should decline, now we have a bullish signal from the change size. So it's a quite interesting situation we've got in oats. But let's move on and have a look at wheat, Minneapolis wheat, where we have a 26% change. And with this change, you can see that commercials have gone above the zero line, becoming net long, while of course large speculators just the opposite and became net short. We're going to have a look at the 5-year chart and see the extreme on this market. Here you go. You can see we've got a very large bullish extreme. The fact that commercials are net long can be considered a really bullish signal. You can see the last one over here. And then we've got some previous cases where actually commercials could not go to net long territories, but still being close to the zero line usually meant that it coincided with low prices. And then we've got corn, where we have a 25% change in commercials positions. And what's quite interesting is basically it's only small speculators who are taking the short side of this market. So both large speculators and commercials are actually net long. This in itself, of course, can be considered a bullish signal. But we're going to have a look at the extreme. And yes, the picture is quite similar to wheat. And it is a definite bullish picture we've got in corn. Let's move on and have a look at large speculator COT Extreme. Here we go. Australian dollar on top with all-time extremes, both in commercials and large speculators. And all this happening after a pretty steep decline in prices. Okay, so we've got a huge all-time extreme signal. We had that extreme for quite some time now, actually, and still no reaction in prices. But of course, usually these extremes may last for quite some time before we really see a price reaction. Actually, at the beginning of this chart over here on this 5-year chart, you can see that we had a quite large extreme, and just after quite some time did prices react to it. So we may see prices declining and even stagnating for a couple of weeks or even a month before we really see a reaction. And of course, we've always got the option that this is a so-called commercial capitulation, where prices will not react and instead continue their decline. But it's of course a rare case. Let's have a look at gold. We have a 438 report extreme there in large speculators, and a much larger 600 report extreme in commercials positions. Okay, here we go. And of course, we're going to have a look at the 5-year chart just to see a wider perspective. Here you go. The extreme is definitely there. Stress levels are huge in metals these days. And of course, the big question: will prices react? Are we going to see a reaction to this extreme, or are we going to experience that so-called commercial capitulation? Moving on to Kansas City wheat, our last market for this week to analyze. We have a 436 report extreme, basically the same extreme in large speculators and commercials. I believe we're going to have a very similar picture that we had in, of course, Minneapolis wheat. These markets, of course, definitely correlate with each other. So we're not going to see any serious difference between these, but I will show you that here you can see that commercials are almost at 25,000 contracts in net long, which is a huge extreme. And you can see that whenever that was the case in Kansas City wheat, you can see it usually coincided with a bottom in prices. So it's actually a really nice bullish picture that we've got here in all sorts of wheat markets. Okay, that was all for this week. If you would like to have a look at other COT charts, you can do so at our COT charts page. And of course, if you'd like to have a more in-depth and detailed COT analysis, well, here you go. You've got the COT analysis page where you can add other really useful functions to your table, long-term trend, the volume and open interest scores, or the COT index. And of course, you can have a look at new COT report types, data types, market complexes, highlights, all sorts of really great functions from our service. So I hope you enjoyed my review, and I hope to see you basically this week. We have, of course, experienced the issue date not on Friday, and because of this, we're going to meet each other in a few days' time. Okay, take care. Bye-bye.